Hey guys, so we touched on pivot point entries in the previous intraday trading video, but in this episode we are going to dive further into pivot points through more aggressive entries. As a reminder, intraday trading is always more aggressive and we don't always follow the traditional rules of swing trading, because intraday trading is more messy and we look for the quick moves in and out. So starting with the pound yen, we had this pair on our watch list for a potential swing trade long, but an entry never came. What we did have was an intraday entry on this pair. The first thing we noticed was 9 green candles in a row before we finally had a red candle. And also, we had a big candle, a smaller candle, and then a red long wick candle. All which show momentum loss, which is an early signal of a possible short-term trend change. So jumping to the 4-hour. We have a very clear divergence with wide swings, a lower high, and then a bearish engulfing candle that also breaks this trend line, which gives us an intraday bearish bias. So let's jump to the 1-hour time frame. Here in the 1-hour time frame, we again have the break of trendline, an EMA cross, and a picture perfect rejection with 2 great long wick candles rejecting the broken trendline, which was your first possible entry. So before we get into the second pivot entry, we have to make something clear. Intraday trading is very discretional because us as traders, we always want to see the picture perfect pullback. But as always, the market does not care what we want. So if you are conservative, you can always wait for the picture perfect pullback. But if you are more aggressive like us, once we have our bias established, such as what we have now, we are already looking for the trade entry through whichever time frame accommodates this bias. So the best entry would be a 1-hour time frame pullback to reject the 50 EMA and reject the pivot. But what we also tend to watch is the 30-minute time frame, which is a more aggressive pivot entry. We don't always use the 30-minute time frame, but in this case we did because it presented a good entry. We not only had a perfect rejection of the 50 EMA and the pivot, but this also lined up perfectly with the key dynamic monthly resistance level. With this trade, you could have again employed multiple different risk management tactics, going for a quick 1-to-1, going for a 1-for-2, or going for the 1-for-1 followed by a break even, which could have netted you a good return on a quick move. So jumping back to the daily, price is now approaching this level of weekly support, but what we have is momentum gain. Up here we had momentum loss, which is a lot more effective. This does not mean price won't reverse, but we would need a breakout on the 4-hour time frame, and again, if that happens, then we would look for a pullback and rejection of the 50 EMA and the pivot for a possible entry. So let's jump to another pair. Here's the Aussie Kiwi. And what you'll see here is that the trigger event isn't always the same. As in this pair here, the trigger event is daily divergence. So why is the trigger event so important? Because we want to be getting in at the beginning of an intraday trend change. The further you get into a trade, the higher the chance price will reverse again, because the trend becomes extended. So again, the trigger event on this pair was the daily divergence. And the key is that the swings are wide, but also that it is occurring on the daily time frame, because the higher the time frame, the better the divergence. Now, jumping to the 1-hour time frame. Here in the 1-hour time frame, this peak here is the second swing high of the daily divergence. We then had a trend line break, which is the first signal of a possible trend change. We then had a picture perfect, very long wick candle, rejecting the 14 EMA, crossing the 50 EMA, rejecting the pivot, and then you would have entered with a stop loss above the high of the wick. This was a quick entry in and out. So let's do this again on another pair. Here's the Swiss yen. We had an okay candle rejection of this weekly level, but the key is what occurred on the 4-hour time frame. We had a break of this trend line, which confirms our daily bearish bias. And at this point is when we started looking for a quick intraday entry with the fresh trend change. So jumping to the 1-hour time frame. Here in the 1-hour time frame, we had a picture perfect entry. We had a retest of the broken trend line and multiple candles rejecting the 50 EMA and the pivot, which made a great quick trade in and out. So we will post more examples of these kinds of trades moving forward. So thanks for watching, and I'll see you in the next episode.